Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 20th, 2023. We are recording this at 1 p.m. Eastern, and this is episode number 409. My name is David Kosmeter. I am the creator of TimingResearch.com, and today we are going to be talking on it's a holiday week, so there's going to be one off day for the market, and Friday's a half day, I believe, right?
Yep.
So today I've arranged for Michael Filighera to join us again, and the option professor is back to moderate. So I'll turn it over to them.
Okay, thanks, David. And welcome, everybody. We're going to have a big show here today because there are some significant things going on, as there always is. But we have made new highs in the SMH. So the semiconductor index has made a new high above what it did this summer. So not all-time high, I don't think, but higher than it was this summer. And so did the Qs. So kind of interesting that they've made new highs. And we've got the Russell still 20 bucks underneath its high, and we got the S&P about 70 points underneath its high. So it'll be interesting to see if it's going to do catch up or if the tech is going to pull back a little bit. Tomorrow we've got big news also, NVIDIA's announcement of their earnings. And so there's quite a bit going on here this week, although it's a holiday week, so we'll have to keep our eyes open. With us today is Michael Filighera. He's going to give a quick background on himself, and then we're going to jump into these markets and see if we can provide you with some good information. Michael?
Hi, Jim, and good morning, good afternoon, good evening, wherever you are in our world. My name is Michael Filighera, and I am the chief cook and bottle washer, as they say, for Traders Helping Traders and LogicalSignals.com. And my background is that I started as an options market maker here in San Francisco in 1979. I've traded here in San Francisco on the London Traded Options Market, the European Options Exchange in Amsterdam, and also on the DTB, which is the German Bourse in Germany. And then I lived in Europe. I returned to the United States in 97, went back to the Pacific Coast, traded again for about 3 or 4 years. And then about 2001, the markets really started to, or the floors, I should say, really started to get extremely quiet. And that was primarily due to, even though the NASDAQ was crashing, that's primarily due to everything going electronic. And so I moved off the floor and came and set myself up in my home and continued to trade. And about 2013, I decided that I wanted to not carry positions anymore. So I became a day trader. And so I've been basically involved with that. And it was shortly thereafter in 2014 that my now good friend, David Kosmeter, contacted me to start doing crowd forecast news. So here I am.
All righty. At the end, of course, you're going to explain how people can get a hold of you to take advantage of your services there. But right now, let's get into the market here. Again, S&P opened up here, and we've got the, like I was saying, the Qs and the, what are you seeing right now? Because, frankly, most all moving averages are under the price and rising. So it's kind of hard to pick a high point. You know what I mean?
It is, and that's why I use Fibonacci. So
yeah,
I've got mine on the daily chart. And again, what you're seeing, all my lettering and the numbering, and that's all my Elliott wave count, which is getting tossed back and forth. I think the most important thing to mention right now, and I don't remember if we actually talked about it last week, and that is a Zweig breadth thrust indicator. And what the breadth thrust is, the breadth of the market. And that really is the advanced decline. And it got triggered twice in 2023. One time, let me just open this chart up and I will show you where they got triggered. These are both important. The first time it got triggered was back in May, and that would be over in this area, and I believe it was right there where it got triggered. The second time it got triggered was here in November, and it actually got triggered twice, once there and once here. This particular time, which was on the CPI number from last week, produced I think it was 17-1. So in other words,
Yeah, no,
the New York
the
Stock.
AD line went nuts. Yeah, the AD line went nuts. It was at least 15-1.
Okay, so what that signifies, folks, in case you're wondering, is that for every 15 issues that were advancing, only one was declining, and that's just like advances swamping the market. So the underlying fact to bear in mind when you're looking at this indicator is when it gets triggered, it normally doesn't even happen once a year, but it's happened twice this year. And the underlying message is that this indicator, when triggered, has a 100% success rate of forecasting that the markets will be higher, in this case, 6 to 12 months out. They'll be higher than where they are now by 15 to 25%. So when we got this, you can see the second time it got triggered, why they just kept buying, why they are just keeping buying now. And a lot of that is because what we did see is what has been missing out of a lot of our market moves, the macro traders. These are the asset managers, the fund managers that really produce and keep positions based on more macroeconomic data. So this indicator being triggered was macroeconomic data enough for them, but were truly the trigger was the CPI. And what the CPI, the narrative changed, and the CPI then started to discuss, or that number started to bring out a discussion that the Fed had completed and were done raising rates. And in fact, we had many analysts then come back out and start talking about when they were now going to expect the market or the Fed to begin to cut rates. And those estimates are now May, June, July of 2024. So when that happens, it truly forces an analyst such as myself to revisit, because it's not something that we should ignore. And what I mean by that is because it has a 100% success rate, I'm not going to ignore it. But at the same time, I have to be honest that currently I'm looking at this going like, well, I know we've got some analysts out there who are talking about Fed's going to start cutting next year, but they're considering that we may be confronting a sudden 30% dive in the markets prior. And that actually fits in what one of my, I'm running two counts and I'm calling them both alternates, because the market hasn't really decided yet. So I have one count that which continues to suggest and allow for a 30% drop. And that would then take us back out. I'm going to go out to, there we go, to my weekly chart where we can see what I'm talking about. So right now, this is the all-time high. And I think, and again, we're in a very much larger correction. So what I have is, this would not be that. I need to change that and put that back the way it was. Would be the primary A wave. And this is still a primary B wave. But I had considered that the primary B wave was complete here. And so what this would be is the first wave down of a C wave. Now, if that's the case, a primary C wave, by the way, we're looking for levels that are going to be much lower. And if the S&P were, say, let's see, it gets up and finishes this somewhere around 48.70, somewhere even 47.14, anywhere up in this zone, they finish it, take 30% of it, and guess where that brings us? Right back down to here, which would put in that C wave, complete a cycle degree A wave, and produce this gigantic rally, which would then fulfill the prophecy of that indicator, because I would be looking for a very large, strong counter trend rally, but rally nonetheless, and most likely would then take the market, because it would have the potential to take the market to new all-time highs. How is that?
Yeah. Well, I mean, you just have to have a few scenarios take place. One is that everyone thinks the Fed is done and inflation is licked, although we're at 3.2% inflation and the core is at 4%. So to say that they're done at 3.2 and at 4, that could be wrong. And then, of course, they're looking for the Fed to start cutting massively. That could be wrong. And then the earnings forecasts are quite robust. We're looking at 3.2% growth in Q4, but then in Q1 and Q2 of next year, they're looking for a 6.7% jump and a 10.5% jump in Q2. Now, if those earnings come in, you know that that is going to be the fuel to get this thing to go back up. And if rates were to drop down, that takes a lot of pressure off valuations. So there's a very good shot that the long term you talk about could certainly come in if those earnings forecasts are correct. But between now and Q1, maybe there'll be some adjustment on the enthusiasm of all these cuts and inflation done, and the Fed is going to start cutting and all that. Because if obviously they changed their tune, or that tune was changed for reasons, people are not positioned for that.
Right. And as we speak, both the NASDAQ and the S&P have moved above their week ago highs. And that actually was needed, right? A week ago, the S&P got to 45.43. It now just touched 45.56 on its way. So it just kind of exceeded my first resistance zone was 50.52. It's now on its way to 45.83. So I'm really calling it 80 to 90. But here's my zone that I think would be perfect for this whole thing to complete itself. Up here at 46, I'm calling this 46.30 to 46.40.
Right.
Now that really will get all the bulls excited. Like, see, told you we're going to new all-time highs. But it also could be the point where it's like, okay, that's enough. Bam.
Yeah. No, there's no question. Every manager has gotten every one of his customers in on this thing now. There's no doubt about that. And the big thing that I'm saying, and I'll be looking at my indicators, which is a relative strength index showing a divergence, and then, of course, a moving average pointing down. When those two things happen, then the thing called reversion to the mean, and the higher it goes, it doesn't become less overbought. So the bottom line is that a reversion to the mean at some point between now and the January timeframe is certainly, I think, not unrealistic. But there's no evidence of it yet. So that's why it's always important to get evidence before you think about something like that, because reversion to the mean is not like an exact science. It just happens when it happens.
I remember I said I had the two alternates and running side by side. I gave you the first one, which would suggest that larger drop. The second one does suggest new all-time highs. But if I'm doing
now,
it
what is the story on the Fibonacci up here? Where's your 0.618 level?
0.618 is right here. But that is just for this one. If I'm going out here for the minor fifth wave, 0.618 is 45.35. 45.85 would be 0.618. It's this one. That's just, but that's minimal. When looking at a fifth wave on a Fibonacci basis, you compare it to the first wave. And the first number really that comes up is equality, where wave 5 equals wave 1, and that's up here at 48.70. So does it have upside potential? Absolutely, under this particular count. Can I say that that's definitively where it's going to go? Jim and I just went over the reasons why.
Yeah.
But technically,
well, like I say, at this point, letting it run to me makes some sense. And then look for your relative strength indicating an exhaustion, and then look for at least one of your minor moving averages to start pointing down. And then start thinking about reversion to the mean, because the higher it gets, the further from the mean it's getting.
Right. Have the daily just starting to get into overbought. Let me see where the weekly stands. The weekly, I think, was already the weekly starting to possibly diverge. Right? See how it's kind of cresting. So we got it building, so we just have to patience. patience is going to be the name of the game here, to be honest with you. And so, and again, when we're considering all-time highs, it depends on what time frame we're in. Because I think if I go out
And
here, this all-time high is at 48.20. I think I had one chart. If I came down to my hourly chart, and actually I can't, it has to be my daily chart. And I went over here. This is 5,000 because it's basis the December contract. Drives me crazy with Thinkorswim that they make adjustments for the contract roll, but that's not one of them. Until I go out to my weekly chart. On my weekly chart, it'll be back down at 48.
well, why don't we look at NVIDIA, because I saw a divergence in the RSI. RSI was on my longer term graphs, the 20-year graphs. The RSI is at 65. Last time it was up here was 73. And then back when it hit 350 on the big run up, it went to 87. So the RSI seems to, the RSI seems to be fading. And of course, the whole world is long NVIDIA. And of course, they're all expecting this earnings tomorrow to be just unbelievable, which it very well could be. But if it's not, it'll be interesting to see what happened to the stock,
Oh, it just cannot get itself back above 500.
Well, I tell you, the way the RSI is, if it does get a good report and it starts blowing through 500, it could go, parabolic.
Actually, yes, I agree. We could have an additional up 100 day.
Yeah.
Or after
But it
hours.
could be a deal, yeah. Like I say, it really will come down to how much they blow it out of the park. Some of these companies have been announcing pretty good earnings.
We have the 20-year chart. It's been an incredible rally. Let's just take it off of this low, which is a bigger low for most companies, even though that NVIDIA's was here. We take it from there. Yeah, it's a weird one. So I have to say 1, 2, and then 1, 2, and then 3, 4, 5 of 3, 4, 5 of 3. So even on that long-term chart, and this is a very bare bones, just take a look and jump. But if I kind of do it again, 1, 2, and now we start a third wave. 1, 2, 3, 4, 5 of this 3. 4, 5 of this 3. So actually, I have to tell you, Jim, it could be that they're not going to be impressed. You get a fourth wave and then you do a fifth.
Yeah, because like I said, when I see 73 versus 65, that's enough of a divergence to tell me that the volume's drying up a little bit on this thing. And of course, going into this thing, you're not going to go tell your boss you're shorting NVIDIA into earnings. You know what
I mean? Yeah, I do.
Yeah.
Because you won't be working on Monday.
Short is either hedging or something, you know what I mean?
Right. No, I agree with you. But it does explain a lot as to why, because normally by now you'd be seeing a lot of pushes to get it above 500, like they're trying again now, and it just reaches a level. So I do think that there might be a lot of professional traders or just institutional people that are willing to start to hedge here.
Yeah. How about some of these other hot stocks? Like, how about some of these other hot stocks real quick, like Lilly, LLY? It seemed to be meandering just above 600. Is this thing peaking a little bit, or what do you think? Because it obviously went through the roof.
Besides, on a 20-year chart, it's looking parabolic.
Yeah.
I mean, look at this.
I was looking at the long-term
slope. Which one?
I was looking at both the 1 year and then the 5 year and the 20 year. And, it does seem to be meandering. Yeah.
And it's straight up. Wow.
Yeah.
Look at this thing.
So I was thinking the 1 year might be, in the last month or so, it's been kind of range bound, maybe 620, 580, something like that.
Here's a 2 year. Wow. This was this huge gap that it did in August, whatever the earnings was.
Well, they also that announcement of that drug thing.
Yeah. The 2 years not as healthy, and it's definitely sideways, and your RSI is pukey.
Yeah.
Not looking as strong. So it hasn't been until very recently that, and here's Barkin, by the way, coming out, and they're just repeating them, that what he's been saying, I guess I have this open already. Yep, I do. Sees inflation being stubborn, makes a case for keeping rates higher for longer. That's Barkin.
Yeah.
And he's the
Well,
vice
that's the kind of
chair.
water you're gonna have to throw some water on this thing because the crowd's
I
getting
know.
out of hand. That's for sure.
I hear you. And every time the market goes up and gets itself to a slight new high, they repeat that little clip.
Yeah.
Because it just brought
Because
the
I had no trouble being positive in the 4100s, but now we're close to 4600s, and it's all based on this Fed being done and inflation being dead, and those are two pretty big statements.
Yeah, degree. Now, Lilly, it's a tough one. They've already reported, have they not?
I think they have. It's 80. What do you call it? 90% are in. The earnings were beat about 80% of the time, so it was a good earnings season. It's supposed to dip a little bit in Q4, but then it's supposed to go nuts in Q1 and Q2. So, the valuations.
I have to be honest with you, for them how they can kind of go Q1 and 2, we're supposed to go nuts. It's like you're thinking again, low interest rate environment, and that the world is wonderful.
Yeah.
So I
well,
agree
you're saying this inflation, it continues down, and
right.
And you're looking at the earnings popping, and so if the earnings are going to jump 6 and 10% in the first half of next year, obviously that would be very supportive to stocks.
I agree, but at some point, and I'm beginning to hear it, not from a lot of people, but I have to try to think and rack my brain. I think it was Michael Hartnett at B of A. I could be wrong, but I know that there's been some talk from analysts who are basically beginning to say that the market is overvalued, that stocks are overvalued. And if indeed, like Jim is saying, that interest rates don't get cut, that inflation doesn't get tamed, or even if it does, even if the Fed comes out and says, we're going to raise that target, we're going to call it 3%, which I've often thought that's exactly what they're going to do, which would clear the path for them to start to cut rates. Well, what's got to happen prior to that is what's really going to create an atmosphere for the Fed to cut rates? Deflation, recession. That is what will happen. And that will give them the reason to cut. So the market is buying into, well, if the Fed cuts at any time, it's bullish. I was like, no, I don't think we can start interpreting that free money is going to continue to be bullish when it's not because we're providing stimulus. There has to be at this juncture, in my opinion, there has to be a different reason for the Fed to cut other than, well, we're just going to bring rates down because we believe the market should go higher.
There's some talk. The bulls are hanging on to the talk that says there's a danger of overshooting, that some of the Fed officials say. But December 13th, they meet again, and they're going to have a new dot plot. And it'll be interesting to see what their dot plot is. The bulls are saying the dot plot is going to show rates are going to get cut by 2 points.
Immediately. It's going to take, if
the dot plot, I think, goes out a year or something like that.
Yeah. And if they start in July or May or June or whatever it was.
Well, some are saying it'll start earlier, like March, right?
I've not heard that, but I can't say that I would imagine somebody is saying March.
Yeah.
But I don't, I think if we need to just kind of step back and really look at reality, and again, how, I'm hanging the hat on that indicator triggering twice in 2023. And that leans heavier on it, but it does not erase the position of the market right now.
Yeah.
That is we need to pull back. And so,
which is a reversion. It's a reversion to the mean. It's a reversion to the mean risk.
Amen.
Right now.
Yeah. And okay, let me just ask you, even if we're talking S&P, and I'm going to put that back up for just a moment, because my question would be, where are you considering the mean?
Well, I have all these moving averages, which I consider the mean, and I think they start at around 4150, and then you got some probably at 4250, 4350, that kind of thing.
Okay. Seen that 20-year chart?
Yeah, I don't have it in front of me here, but
Well, I will.
on the 20-year
I'll
graph,
put it up for
yeah,
you.
the 20-year graph on the averages that I'm looking at are basically coming in.
You got
I think
it. You're absolutely right. I've got a 50 simple sitting at 42.45, and I got the 200 simple sitting at 39.65. So let's take the diff.
yeah,
You're right there, 41. So
yeah.
yeah. A reversion to the mean pulls us back down to that. Absolutely. And I don't think that's unhealthy. You know?
Well, I tell you, going right up to 5,400 wouldn't be very healthy, except for the people who own stock, because it would probably mean that you've got a pretty robust, shall we say, ability to charge people money.
I agree with you. I agree with you
Because
on that.
if you go up to those neighborhoods, if the profits are going to be going up like they're talking about, it's going to have something to do with higher prices.
Right. Now, I do not disagree with you on the value of that statement, that it doesn't suggest that we're in this healthy economy and a healthy market by running stocks up to 5,300 or even 5,000. It doesn't.
Now let's look at the small caps, IWM, and let's get an idea of this
IWM.
thing. Because the last time we were in the summertime, it was at 200 on IWM, and we're at about 180 now. Do you see on the
And
stuff you're looking at that it's going to have a heck of a time getting above 200 or even 200?
I
Or what do you
do.
think?
I do. Let me bring it out of this super big picture, and let me go to a 10-year daily. First of all, you can see same deal. I consider that this high, which is a 240, 230, excuse me, 234, was a high, a major high. And then the market went through, put an A wave down. I'm calling it primary A. Then it does this absolutely gorgeous triangle pattern. And I'd extend these, but on toss, it goes and it cuts into this, which is why they're not extended. But it is a triangle. That formed primary wave B. Now we're getting a primary C wave down. Now, let me bring it into closer to really what we're doing. I would put an intermediate wave 1 here, and I'm leaving this open as to what exactly all of this could be. I just have that it did 5 waves down, and now it's beginning to rally again. Now I'm going to bring it down one more time. I'm labeling this 1, 2, but it very, very easily can be A, B, C, which in case, if this is 1, it would be an A, B, C, 2, and we roll over and it goes strongly lower. So we're back to that scenario of, hey, do the markets have a chance or a possibility, or is there something that could trigger a 30% or greater decline over a short period of time? And when I look back at it, I'm like, well, we weren't expecting a pandemic, and we certainly weren't expecting that everything would get shut down and none of us could get up and go out to work.
Right.
So is there a situation that could do it? Yes. Could it be unexpected? Yes. What could it be now? Well, we got a lot of geopolitical hotspots all around us, all around us. We have a internal political hot stuff going on. And so, yeah, there are plenty of things that could be a shock to the system. Boom, we drop, and boom, then it comes back, because the government then, or the Fed then, may step back in and go like, okay, we need to stimulate. Okay, let's cut rates. Then cutting rates more aggressively makes total sense to me. Right? They're going to stimulate without injecting capital.
Let's turn a little bit to energy, because there are those who believe that the supplies are still going to be problematic, and that the winter will be cold for natural gas. So let's take a look at the crude, and then we'll go into a couple of different stocks.
Sure.
Can you put up
Here's
the
crude.
CLZ? Yeah, crude.
Here's crude. Crude.
Now, I had a ton of support. I had a ton of support between 70 and 73, which is held, but I also got decent resistance.
It bottomed,
at
my
80.
friend. 72, 37.
Yeah. No, that's where you want to take your shot. Now you're just hoping it keeps going, and your hope will be more confirmed if we get above 80, right?
Yes. Yeah, because
Yeah.
now we're back in the upswing. And if I do this correctly, this upswing should carry us all the way back, right? It surpassed 618. Now, and again, that is taking from that low up to the high, down to this low. Is it? Yes. And I'm a little bit off. I'd have to adjust my numbers just a tad because it should come in here. So we should even be higher. But our next tackling spot is going to be 83. And then
Yeah.
beyond that, then we're looking like, yeah, we can go above 94, 95.
Because, one thing that was very helpful to me, both on the up and the downside, is the Goldman Sachs Commodity Index, which half of it is energy. And it is at 565. And
You know
my
that
work
symbol?
says, well, I have GDZ, but I don't know how you get it.
EZ? No.
GDZ.
George
Yeah.
David.
So anyway, what do you call it? It's at 565. And if it can get above 578 and 581, it would really turn the trend back up pretty nicely. And if that trend gets turned up, I think that the oil will definitely get their legs back. So your move to 80 or 83 might take that index up towards that resistance, 578, 581, and maybe it fails
Yeah.
from there if it can't get above.
Yes.
So that's why I'm
and it
a little
actually,
hesitant.
it actually would depend on this structure.
Yeah.
1, 2, 3, 4, 1, 2. It's very bullish structure at the moment. But what
Yeah.
it does look like, as soon as it can complete 5 up on a 1 hour chart, you're looking for 3 down. So whatever happens, if it can get itself up towards 80 and then it pulls back, you want it to hold 76.50 if it's going to do another leg up. But I would definitively, no matter what, whether it's corrective or not, I would look for the 5, then a 3, and then another 5, and then what's the conditions? What's going on? Are we going to just back a little bit and run up in another 5, or are we done and we come flying back down? And what I mean by that
Now
is
let's look at why don't we look at Occidental Petroleum and see if there's something going on there, because I think Buffett still is a believer in that company. And
what do you want me to start? A 10-year, a 2-year?
OXY. Yeah,
I
let's
got
start out
OXY.
with a longer term and move it into the close end.
Okay, here's the 10-year.
Yeah, we
So
get
we're
big
taking
picture,
this
small,
off
medium.
I'll open it up. So we're coming off of that 8.49 low, $8.49 low on October of 2020. So now
Yeah.
I'm going to open this up and we got all this boom. 1, 2, 1, 2, 3, 4, 5, a 3. Long-term 4. Yeah, I think we got one more pop. This has been, look at the sideways move it's been doing. Over a year.
Yeah.
Over a
Yeah.
year it's been moving sideways.
Yeah.
One way or the other, it's going to break. I will say that.
Yeah.
One way or the other, it breaks. But my guess, that's pretty much what it is from here. I don't actually do day-to-day analysis on Occidental, is that it's going
Right.
to pop higher.
What about in
Because
the natural gas sector, RRC?
Range Resource, wow. Same time frame, taking it off the low from March of 2020 at $1.85.
Your moving averages are under the price on this, isn't it?
Oh, very much so.
Yeah.
Very much so. You got divergence galore.
Yeah.
On a 10-year chart. I think I'm on the 10-year. Yeah, I'm on a 10-year chart. You got divergence galore.
Yeah, people are talking El Nino causing a pretty cold winter in Europe and the Northeast, and that could be positive for this kind of thing.
Then why is the RSI sitting down this far compared to
Lagging?
prices? Yeah.
Yeah.
Lagging big time. I mean, if I had to go here, I go 1, 2. This is strong. 1 and then a 2. Yeah, it's very choppy. So it's always more difficult on commodity based or even like natural gas, because natural gas fluctuates so much. You know, how much data do you want to go on, and you got to pull it in closer. But even if I just open up this and just go from this, Feb low up to that high, that's quite a march. That's $15. And I see why RSI is like lagging now. It dropped very strongly, very quickly. And it may pop, but again, to be honest with you, what you're kind of looking at is the possibility that and that's taking that little low stays in place, maybe back to 35, maybe back to 36, and then you do another leg down. So maybe you do end up back down here. And
if we have deflation, of course, that'll hurt everything.
true. But I don't think we realistically, at least I don't see how realistically we could actually say when that type of deflation or those things would occur.
Yeah.
I think it's they're going to, but what's going to kick it into gear? What's going to lead it? I think that's like, if they're rallying because crude's rallying, that's silly. The dollar going down. Look at gold. Gold's not rallying, and normally lower dollar, higher gold, simply because the euro is gaining ground. Good ground, by the way. So,
well, of course it is. I mean, when our yields go from 5% down to 4.40 so quickly, obviously they're going to fade the dollar. But I'm thinking this 102, 104 neighborhood could very well be the low of that move, unless they're going to bring the yields all the way under 4%. If that happens, obviously the dollar could go in the toilet pretty good. But if they don't,
I actually don't.
I'm thinking 102, 104 is the bottom of the pullback off 107, 108.
Well, I've got that listed as a small wave 2. So I think we're in a wave 3. And if I'm correct, I would show you what my fibs tell me. Right to that. Thank you. Below par. But
no, if it breaks 104, 102, it's definitely going to par.
Yeah.
From what I see.
Let's pull it down, because we'll shorten the term here. I mean, this has been a strong like kill it. So you're right. We're honing in on 103. And then if it breaks 103, then they'll likely quickly sink it to 104. 102.
Yeah.
Now,
and so that's the neighborhood, but I mean, if the yields were to drop under 4 on the 10-year, then any support that the dollar had, because we've got fiscal problems up the kazoo. And so people are going to start, fading that U.S. dollar if the yield advantage is being thrown out the window.
I do have a yield chart, so let's take a peek. I do think we're.
Now, I have it stopping between 4% and 4.25 worst case. So basically, that's unless we're going to these 3% yields and this stuff that everyone is talking about.
Not yet. Now it just kind of blew through 4.5 support.
Yeah.
But it started like it wanted to get back to it. But now they're beginning to, they're rallying the bond market strongly, which is nice. So you're right, because next stop could be 4.2. It should definitively find some support of 4.3. I agree. 3.5, 3.5, 4.3. But then it could drop, and then I think it finds stronger support than a 4.2. If I had to measure 1, 2, 3, 4, we are pulling into a low. We should get a rally back to at least 4.5 to 4.6, 4.7. Then again, another decline. So depending on
if
what
this thing does rally
back,
if this thing rallied back anywhere near 480 or 5, this stock market rally, I think, would be definitely in jeopardy.
It would cooked if it dared rally back. If it has any necessity to go back to 5, well, that tells you they ain't cutting rates. So I agree with you. It would absolutely devastate the market, and the whole narrative that's going on right now would kill it.
Now, when the dollar does drop, and I mentioned this many times on these broadcasts, and I mentioned it for the last 6 months. I mean, if the dollar does roll over, these countries like Brazil, EWZ, Mexico, EWW, India, INDA, and the other, developing nations, emerging markets, they would benefit, I think, quite a bit, and they certainly have lately. I think if you look at EEM and some of the other ones, EEM, EWZ, EWW, INDA, India, all those.
Like Euro Pacific, EEN, Edward, Nancy.
No, Mary, Edward, Mary. That's pretty much China and Asia.
Oh, they are doing nice. Look at that.
Right. And then Mexico,
Lower
EWW. Yeah, EWW was way down in the 50s and the 40s or whatever, and that just jammed out of there.
Well, it certainly did. And you're right. I don't have the ability, because I just don't know how. If I were to put the dollar index chart over this, you would see that
well, I'm
correlation.
sure it would look like a twin, yeah.
Yeah, oh, absolutely. Except going in the opposite direction. Dollars going down,
Right.
these are going. So yeah, I agree. I agree with that statement about, if the dollar does any turn, starts to go up, these guys will go down.
Yeah, exactly. Another thing on the gold, before we get into the price, there's a couple of gold stocks that I thought the charts looked pretty good on, particularly if gold is ever going to break above that 2,000 area, get that RSI through 60 and go into an acceleration phase. GFI, Goldfields, I think it's one of the better long-term looking charts. As long as it can get above 13, 14, I mean, it could really have a future.
Go to the 10-year. Wow. Yeah, and look how long, like gold, it's just been sitting in nowhere.
But isn't a moving average under the price and rising on GFI on the 10-year?
Barely. It got caught up in
barely,
this. Let me go like this so we get a better picture. See, it got caught up in that. And then one day, and then it sank again.
What about on the 5-year? 5-year show?
Gold has been a little bit disappointing. I got a weekly 5-year.
Oh, there's no doubt about it, because it can't get the RSI through 60 on the monthly graph. If you can't get through 60, my view on the RSI is that's the top. So if you get through 60, that'll open up an acceleration door, and an acceleration door would be very exciting. But that's not happening yet. But if it does start happening, I think GFI would probably benefit, and HMY, which is up about 20% in the last month. HMY is very cheap.
GFI, it looks like at least this is the daily. It's a 5-year, I think. Yes, 5-year. And see, the RSI seems to be going flat, so it's not really rising anymore. It's not, well, it has been rising, but it's not declining.
Yeah.
So that low if this low holds, then I would anticipate that the market does begin to climb back up out of all this.
Now, the GFI you're looking at says Goldfields, correct?
Yes, it does.
Because I really needed to I wanted to get above 1325 and then 1425 to open up the runway.
I think you got a very hot chance. I think you got a very strong chance it'll do both.
Yeah, I mean, maybe by April.
April of 2024.
I'm looking a little further down the road. I'm trying to, look a little further down the road, because gold went down to 1925. I think it might do it
before April. So the challenge would be, can it stay up there? Can it stay up there? So yeah, in that respect, but I think just even on my daily, it's looking like, it should get above 1325 pretty easily. 1425 would be, it's a dollar.
Well, that would be a big breakout. That would be a big breakout at that point.
Yeah, it's very similar to what we saw, but don't forget, it's just pulling back. See that gorgeous breakout that it did?
Yeah.
It's just pulling back because of that. So I would think, let's just measure it out. I'm just straight fibs, guys. So it's not like, this is like hardcore analysis. It's not. It's just based on fibs. There you go, Jim. There's your first stop. 15. And if we're doing it on a fib basis and we're expecting a leg up to equal the leg that it did off of the low to that high, you're looking at 1661.
Now, is copper making a deal? FCX, because that thing seems to be holding that 30-35 area, and it's starting to creep a little bit higher. And there's some talk that if China really gets their thing going, it's going to use up a lot of copper. So what are you seeing on FCX?
Up almost $1 today. Again, everything did the decline because we had a lot of stuff going on in the whole thing. And if it's coming up off of this decline, A, B, 1, 2, 3, 4, 5. A, B, C. Oh, you know what? It's a two-way street here.
Yeah.
It's gotten above the 20, it's gotten above the 8, and now it's above the 50. These are simple moving averages. Its target is likely the 200, which is at 38.70 right now.
Right.
I think you could, if this is an ABC down, then you got strong potential, strong. And if I just do straight fibs, which is just retracements, you know, it's honing in on 382, which is 37.36. Then you got 50 at 38.76, and you got 40. So a good run back up is just taking it back to 618, and that's just of the decline.
Now, in the
RSI,
silver market, Pan America Silver, PAAS, is there any potential to that if silver got moving? PAAS. Peter, Apple, Sam.
if you know what, if silver could catch a bid and they could hold it, then yes, I could see Pan American just really skyrocketing. But it's been held low for so long.
Yeah.
That I think that anytime it gets a bid, you get the longs are like, I'm done holding this thing, and they just start to get out.
Well, because the higher for longer rates, you know, high rates is gravity to asset prices. And that's one of the reasons why our asset prices are going through the roof, because they're screaming that gravity has left the room, meaning we're not going to have high rates.
Yeah.
And if that's the case, then there's a reason why if the gravity's leaving the room, then asset prices can really soar. And the question is
if gravity leaves the room, I think that's brilliant.
Yeah. Well, listen, they're betting gravity's, believe me, they're betting big gravity's leaving the room. So, you know, it better leave the room.
If this thing's going to go higher, otherwise it's going to take control again, right? I like that analogy a lot. But back to Pan American, this is 5 down. This is 3 up. This is complex. Yeah, this is, it's just 5 down, 3 up, sort of maybe 1 down, 2, sort of like the 3. It looks like it has more downside before it goes up with any sincerity. But again, being that it's attached to silver doesn't mean that it follows perfect Elliott. It's a different type. It's a different animal because there's such different things that affect its movement. Primarily, the price of silver, which has been a massive disappointment, Jim. I don't know how you're feeling.
Well, it's just, you know, there's a number called 26, and if you can start trading above 26, you can get off to the races. And if it can't, then it's just going to be like gold at 2100. You know, it's going to keep going up and failing, keep going to go up and failing. But the gold has shown some good. Let's look at the gold, because I thought that 1925 neighborhood was very important to hold, and it did hold. So it's still. Yep, I thought that was a very important neighborhood to hold, and it did. So if it gets underneath 1925, then I think you're in a little bit of trouble with the gold. Now, if we can start getting above 1980, 1990, 2000, and get that darn RSI into the 60s, mid 60s or higher, then an acceleration phase isn't off the table. If they're going to cut 3 times next year, or 4 times next year, it's not a big leap across the Snake Canyon to figure out gold might go up, you know.
But you can see my targets. I think that we had a nice little triangle pattern. We launched up out of the triangle, and I'm going to open this up a little bit so we can see the inside. We launch up out of the triangle just as it should. We did 5 up. I'm putting a 1 there. Even if I'm in a minor 5, it's going to consist of 5 waves of this color, a minute degree. That's 1. Here's 2. We're entering into a 3rd. And we're still, and then they did this. I'm like, okay. So I'm agreeing with you. I'm thinking of 1966, which is, let me open this up so we can see where my support zones are. 1966, 1958. I say 58's got to hold. Your number's even below. I would not want to see it below 1935 because it just changes the dynamics of this. And it just,
No,
then I have
exactly.
to
I mean,
think
this
like,
is listen. We're going into December, January, and February. I think those are historically pretty good months for gold. And so the bottom line is you had a correction down to the 1925 neighborhood. You're back on the upswing. I think the calendar is starting to be favorable to you. This idea that the rates are going to go away is, I think, favorable to gold because, high rates are tough on asset prices. So,
yeah,
I think it's very interesting.
Then they look at the other conversations about, well, maybe this, maybe that. And because I'm stymied today thinking like, wait a minute, dollar's down pretty heavy, not something small. And gold is down a whole lot more than this, right? Gold is $13 lower than where it is right now, early. So it's recovering. So I'm like, well, what drove it down to 1966? So I'm not massively disappointed as long as I can do a 1-2. I'm like, well, get it going, guys. They did that beautiful rally last week on the 14th, right? Bam, pull back, do another solid rally, get it up. Like, okay, you're going to 2000. No. Whack, whack. So I'm like, okay.
Yeah. That's what I'm trying to say. It's a frustrating market because that RSI is keeping it back in my view, because people can see the RSI is up in that high 50s near 60. They can see that that's where it failed from before, and maybe they made it. Maybe they don't trust the Fed's going to be cutting.
I hear you.
But well, I think we covered pretty much it all. We could just look at crypto, GBTC for your Bitcoin, GBTC. I mean, I got bullish on this thing back in May, so I'm not that interested in it here.
Actually, I didn't hear your symbol.
Gary, Bobby, Tommy, Charlie.
Grayscale Bitcoin Trust.
Yeah.
I
mean, this thing, this thing was given buy signals, way back in May.
Bitcoin heading back to 40,000. Like they're just like, okay, now it's in favor. And I'm thinking like, okay, so what was that? You didn't think it was in favor.
Yeah.
Now it's back in favor, but that's pretty steep. Look at that.
Oh yeah, no, they are saying that the younger generation view this more as a hedge than the gold because they see more utility in it than the gold. They can't see themselves taking Krugerrands and bartering with Krugerrands, but people accept Bitcoin as currency.
Yes, you know something, the dollar is going to go digital. So, who's right, who's wrong? I don't know. I'm too old. But I see this as a 1, 2, 3, 4, 5, maybe a little bit more. Oh yeah, it is. It's peaking its nose to a new high, and then we pull back. But it should be.
And then the other one that comes from the crypto is ETHE, Edward Thomas Harry Edward, Thomas Harry Edward, and that's another one that gave buy signals back in the May timeframe, and it's been a nice run.
Yeah, there's the signal down here last June, and bing, bing, bing.
My opinion is these trade on a regulated exchange, and their volume is millions of shares a day. Or you could open a wallet with some place where you don't know and put money in there, and the next thing the guy's in the Bahamas with 3 names, Sam something Freed or whatever.
He's going to jail.
Yeah.
Yeah,
I'd rather have something that's on an exchange that's regulated, and we can kind of keep an eye on it a little bit better than some wallet somewhere somehow. But that's what the modern thing is to do the wallet thing.
Well, that's because we do have a few minutes here, and then we're going to stop. But this will be the last one.
Sure.
Our buddies. You do know who they hired over the weekend?
No.
Sam Altman.
Oh yeah, that went over like a local news, huh?
There you go.
Yeah.
And now suddenly everybody's like, oh, you know what? Microsoft's up 8.
Yeah.
So
Yeah.
I've always been a fan of Microsoft. The one thing it cannot escape is just like, I'm going to use your term, gravity.
Yeah.
It goes up because everybody's buying back in. Because is that bad news or good news? It's like, I think for Microsoft will listen to him say, that he's very bullish on AI, but he thinks that
Yeah.
some controls need to be put over it before AI takes over humanity. Everybody wants to laugh
Yeah.
at that statement, but it's like, if just let him make the full case for it, folks. We
Yeah.
can't have a program out running by itself. There always has to be the human interaction with it, because it has to have some controls of being stopped. Otherwise, it can just, if we had an algorithm that was AI controlled and it was to buy something, just keep buying it. Well, until the algorithm is told to do differently, that's exactly what it's going to do. So I think
So price distortions could be pretty big.
yeah, yeah. So I like the fact that he, first of all, he got fired. So AI's lost, ChatGPT's lost, and Microsoft's like, come on, get over here. We think
Yeah.
you're brilliant, and here's some money, come and help us. So I think
Yeah.
it strengthens Microsoft's AI position.
Yeah.
You might be buying in early. You might be buying because you got expiration coming on Friday again, and it's a shortened week. So all this
Right.
kind of good stuff as an options trader. But I think in a long-term picture, as far as AI, I think Microsoft can start taking the lead on a lot of different fronts.
Well, they seem to be.
Well,
Because
the
their
weird thing
platform.
too is that isn't Microsoft one of the main investors in OpenAI, or the main
Yeah.
GPT,
Yeah.
yes, yeah,
Yeah.
yeah.
so
They went and grabbed the leader. It's like, okay, fine, you don't want him, we do.
yeah.
And
So
what's that tell you?
they still have
It kind of
both.
makes it kind of makes you think, it's like, oh, so who are they really investing in? The company or the person? Right? Now that the person's gone, is Microsoft making a statement? It's like, I don't know, ChatGPT. I don't know. We don't know what your chances are going public are going to be.
Right.
Who's going to put the billions of dollars more into it? Microsoft can afford it, right? If they lose that in investment, they just picked it up by hiring the guy, hiring
Exactly.
yeah, Altman.
Whatever he knew over there, he can know locally now.
Absolutely, and keep it in.
All right, let's tell people how to get a hold of you, Michael, and if you have any special offers, you might want to mention them.
I actually don't have any special offers, but you can get a hold of me by my email is michael@mjf1partners.com. What I do have at the moment is I do a daily update on YouTube, and my channel is Traders Helping Traders, and then my name, only because someone else does and snatched the name Traders Helping Traders on YouTube. So combine the two and you'll find me. And so I do a daily update on the S&P 500 and the NASDAQ 100. I do weeklies, which is I usually will open up to the big technical picture. And then also I most of the time will include treasuries, gold, and the dollar. I also provide coaching, and I also have a trade room, but both are very short-term focus. Any questions, please email me.
Sure. And what's the email again?
Michael@mjf1partners.com.
Perfect. Okay, guys, and as far as I'm Jim, the option professor. As far as optionprofessor.com, you go over to the website, OPTION professor.com, and put your information in. I'll come back to you and I'll explain how I send you a link to the indicators I use to figure out when to market direction. And then basically we have an online meeting where I can go over your questions, have your stuff gone through my indicators. A lot of people have found out that have been very valuable, either avoiding losses or spotting opportunity. And so we do all that up front for you, and then we go from there. So optionprofessor.com, put your information in there, and then I'll get back to you personally, and I'll send that link over to you, and we'll have a talk. David, thanks a lot, and Michael, thanks a lot. Let's have a good Turkey Day, and we'll talk to you guys after the holiday.
Same to you, Jim.
All right, thanks, guys. Great discussion as always. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Or you can also just go to TimingResearch.com to get access to any of the past shows and presentations there. I just want to thank my guests again for today, Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com, and also the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.